right, gang, we got a lot to talk about today. Welcome to Money Talks. I'm your host, Bill Barheit, the founder and CEO of Abra. I'm just back from a grueling, fun, exciting, and actually newsworthy 10 days in Singapore. We had Token 2049, we had Solana Breakpoint, we had the Network State event hosted by Balaji Srinivasan. We had the Milken conference, and we had about maybe 35 to 40 sizable side events, all crypto/crypto AI related over a 5 or 6 day period, of course, culminating in Formula One, which takes place in Singapore during that week. And Temasek, which is the sovereign wealth fund of Singapore, hosts its kind of yearly gathering at the same time, which has kind of become the centerpiece for all of this. And so truly astounding. I mean, dozens upon dozens of friends, colleagues that I know were in town. I think Token 2049 had something like 25,000 participants. Solana Breakpoint, which was really an awesome event. Congrats to the Solana Foundation team. Had, I think, 5,000 to 6,000 participants. And the Network State event, which really is a very different type of event, had upwards of I think, 2,000 to 3,000 at least. I mean, when I was on stage, I was shocked because I really didn't see the size of the audience in advance until I stepped out on the stage, and I couldn't even see the back of the audience. That's how many people were in the theater when we were on stage talking. So the next Money Talks, we're going to have our new co-chairman Shervin Pishvar with me to talk about some of the things that we discussed on stage during the Network State event. I'm not going to spend too much time on that today. We have so much macro news to get to. But again, I just wanted to highlight that, first of all, if you want to make a profitable business in crypto, running an event business might be your best bet. It's clearly astounding how many companies are paying to attend these events. The dialogue, I would say, probably Solana, Breakpoint, and Network State were my two favorite events. The number of companies building on Solana now is truly remarkable. It feels bigger than the early days of Ethereum. So if I go back to the early days of stablecoins and the ICO boom, this feels bigger, right? I'm seeing a lot of gaming companies, a lot of kind of neobank type stored value companies, applications that you can't build on Ethereum because the transaction processing at this point is too expensive, or you have to basically go into a layer 2, which, especially for consumer apps is very complex because, consumers don't understand layer 1 versus layer 2. Okay, enough of that. As I am speaking right now, about an hour ago, it appears that the Israeli Air Force has just bombed the main headquarters of Hezbollah in Lebanon, which is huge. The video that I'm seeing is absolutely horrifying. This is not a politics show. I'm not a war correspondent, but this is an investment show where I talk about macro, and war breaking out across the entire Middle East has repercussions for the entire planet. Obviously, loss of life is the most important issue here, and I pray that the powers that be figure out how to bring these conflicts to a close. This has been going on for too long. I understand a police action resulting from last October's horrific terrorist events. I also understand and believe that Israel has a right to defend itself, but we don't need World War III. This must end. And it's incumbent upon Netanyahu to take the high road and figure out how to make this come to an end. He has sent the world a message. Don't mess with Israel. Everyone has gotten the message. Hopefully, this will not escalate beyond where it is now. But these videos that I'm seeing, I'm literally watching them in real time as I'm talking to you for the first time, and they are horrific. Okay. Let's pray for the Middle East and hope that that this comes to an end. Again, not a politics show. I did notice that, and I'm sure many of you did, that the grand jury in New York, I believe resulting from an investigation from the Southern District of New York Federal District Attorney Office, has brought charges against Mayor Adams, or is about to, based upon the grand jury recommendation. And supposedly he received something that would constitute a bribe or kickback in the form of either free airlines or hotel room upgrades. And on the surface, it may sound silly, but I think that we need to hold politicians, especially politicians that are running the financial capital of the world, to a very high standard. I don't know a lot about Eric Adams. I know that he's been a supporter of our world, but I don't care at the end of the day relative to the standards that we have to hold our politicians to. Now, I also believe, and having dealt with many government agencies myself over the last few years, that people deserve the presumption of innocence until proven guilty in a court of law, or unless he is forced to settle some charges, which in my world is often the case because most people can't afford to defend themselves anyway. That aside, I think people will say, well, what about what's happening with President Trump and all of his court cases? Look, I'm not an expert on each one of these court cases, but I do believe that there's a tremendous amount of politics here. If you look at the number of politicians in the United States who break laws, whether it's insider trading, right? Insider trading laws, which I believe are being broken by many longstanding senators and congresspeople in the United States. Campaign finance laws, information storage laws, where it goes back to using your personal email server when you're running for president, to storing confidential documents, which is a no-no. I mean, I used to work for the intelligence community as a kid, and I can tell you, you can get arrested for that. Don't do it, right? So all politicians in some way or most are most likely breaking laws of some kind. Does that mean that they're all evil people setting out to do harm? No. There are some who are probably bad. And by the way, the best way to deal with all of this, all of it, is to have term limits. If you're not in office, you can't do any harm. And if you know that your time in office is limited and you can only be there for enough time to do no harm, by definition, you're not going to be doing any harm. And the graft and grift going on in American politics will be greatly diminished. Okay. Again, that relates strongly to me to policies that affect our long-term investment theses and how we allocate our money, right? The less grift there is in politics, the more likely we are to have a balanced budget, the less likely we are to run deficits, the lower interest rates can be long-term, the better off the economy will be, et cetera, et cetera. Okay, so while it's not a show about politics and what's Bill's take on this person getting arrested, or the attacks on Trump, or how Kamala did in a debate, all of this is intertwined in some way. It all affects how we run our country, how we run our lives, how Wall Street is going to work, how taxes are going to work, how the economy is going to grow. What's going to happen now that our economy has reached a desalination point which is effectively a negative feedback loop, where the interest is growing to the point where it's now going to be the single largest component of our budget, uninterrupted forever, unless something else changes, or we borrow even more money to spend on other things besides just the debt, right? Although I don't think that's possible anymore. Okay, so we'll come back to macro in a few minutes, but it's all important to me, folks, and it's all related. Let's talk about tech for a few minutes. Super exciting week for both crypto and AI. I talked about all the conferences happening in Singapore. Meta had a huge set of announcements this week focused on AI. The by far the killer announcement, and this is like not quite an iPhone moment because it's not productized yet, But Meta announced, and Zuckerberg, the new and improved Mark Zuckerberg, if you've seen him lately, he looks like a rock star. Meta has announced this Project Orion that apparently they've been working on for 10 years, which, try doing something for 10 years, right? New AR glasses that kind of weave both AR, augmented reality, and artificial intelligence into everyday life. So you've all seen virtual reality, these big heavy goggles that you wear. And if you've seen the Iron Man movies where Tony Stark puts on those glasses where he talks to Jarvis via his sunglasses, that's augmented reality. Those glasses can basically take holographic projections and place them in the real world in front of you so that what you're seeing looks like it's part of the real world environment. So if you're reading email, watching a movie, looking at the prices or caloric intake for what you see on the store shelf, it's a holographic projection on top of what's really there. This is exactly what Zuckerberg demonstrated on stage this past week, and I have to say it's one of the coolest product demonstrations I've ever seen in my life. About 10 years ago, when I used to go to TED, when TED was still Technology Entertainment Design, they did a demonstration of the original Magic Leap. Now, this wasn't really a demonstration. It was a canned video where basically they had, whales flying around in the air around the stage or whatever. But again, it was a pre-canned CGI video, which we were led to believe was real, but based upon what happened with Magic Leap, which does work, by the way, after 10 years, but it's night and day, second generation compared to what Orion has just shown us, right? This was untethered, right? Completely live demo, multiple people with videos released of other well-known internet influencers and artists and designers and marketing folks trying the glasses. I'm not here to shill Facebook. I have my issues with Facebook, but wow. If this was a actual product launch as opposed to just a prototype demo, it would be considered one of the biggest, most important product launches in consumer product history, on par with the iPhone itself, which clearly is the most important new consumer product of the last 10 years. If they can productize this thing in the next 12 months, which I'm guessing they will, especially given the feedback, if I was Zuckerberg and I saw this market reaction and feedback, I would put every penny I had into making sure that the killer version of this was released in time for Christmas next year, and this thing will fly off the shelf, and it would be as big as iPhone plus Android. Okay. Go watch the videos online. I'm sure you've seen it. Probably not telling you anything you haven't seen, but giving you my take. From an economic investor perspective, super bullish on Meta after this week. Their approach to AI, by the way, has been very impressive. One, open source. Ironically, OpenAI, which we'll come back to in a second, is closed source. And I say ironically because it was originally meant to be a foundation, which was going to be open source. That's what Meta has become. So we did a 180 here between Meta and OpenAI in terms of what they represent. Now, I use ChatGPT way more than I use Meta's AI capabilities embedded in Facebook and other places. But I wouldn't be surprised if that changes, if they start generating or creating and releasing interfaces that make it more ChatGPT-like in terms of my ability to do business research, legal research, product strategy, marketing strategy, all the things that I use, hiring strategy, interview question review. I use ChatGPT all day long. It is remarkable. It has made me more productive. And I think that Meta has a chance to get on par with them, but from a more consumer-oriented user interface perspective, which is huge, right? I wrote an article, I don't remember which publication published it, about maybe 2 years after the iPhone was released, and the title of the article was Disappearing Computing, or something to that effect. The idea that even though Moore's Law is making computers more powerful, and it's probably the single most important economic driving force of the last 25 years in the information economy, right? The actual form factors are physically disappearing. We've seen it in the last few years with the Apple Watch. Here's my watch, which is charging, and AirPods, and little tiny phones, which we carry around. And by the way, it's easy to remember that the iPhone has replaced an unbelievable number of devices, right? And things that you might have on the desktop. And I think we're, in terms of disappearing computing, on the verge of another breakthrough where the glasses may be the last, I don't know how to say it, but the last kind of iteration before we get to kind of direct neocortical access for computing. And Neuralink is the most well-known example of that. And that's obviously very advanced surgery. But think about nanoparticles injected into the brain safely that accomplish the same thing. Quite certain that someone in some lab, MIT or China's equivalent, is working on something like that, which I wouldn't be surprised to see commercialized in the next 20 years. And AI, ironically, will accelerate the development of that as well. So, bunch of new phone announcements. Samsung's got a new Galaxy phone, which brings AI features at a lower price point than Apple. We talked about the new iPhone 16 last time on Money Talks, which also brings Apple's new artificial intelligence capabilities. If you look at where Samsung, Google, Apple are with their phone development, yeah, there are nuances in terms of features, size of camera, size of battery, AI capabilities, but they're all converging, which tells me the amount of innovation possible in the handset is more or less either been realized, or squeezing more out of it is nearly either impossible or incredibly expensive, which tells me that that product cycle is nearing its end, and the glasses wearables is likely the future. I don't know. I don't spend my time researching consumer tech, but I understand it, and I'm pretty sure that that's right. Okay, and Solana, by the way, at the Solana Breakpoint event, announced their new second generation Web3 phone. I don't know if they call it a Web3 phone for lack of a better marketing term. I'll call it that. They call it the Seeker, and it will come with updated versions of the Seed Vault for Solana, the ability to run dApps natively, a secure enclave for accessing and storing your private keys. Basically, it's a crypto-centric device. Now, this is really interesting because it's kind of like a way to carry your stuff as digital assets. And again, that enclave on the phone basically says, this is my portable Web3 identity. I can sign transactions. I can literally carry digital cash on the phone. Now, I can do that on my iPhone today, but I'm installing apps and I'm actually using kind of the built-in hard disk, if you will, of the phone to do that. Whereas with a Web3 native phone like the Solana phone, there's a secure enclave on the device, similar to the Apple Pay enclave, where Apple stores the information available for its NFC Apple Pay stuff. But again, with a very crypto smart contract centric model, which is perfect for for smart contract and Solana developers. And so very exciting, really a lot of interest in this phone. I heard that the number of pre-orders is significant. And so, while on the one hand, Solana is not a phone company, the founder, Anatoly of Solana, did work at Qualcomm, and he has a significant amount of experience with the phone business via his time at Qualcomm. So this is not, just some crazy person thinking, oh, we should just make a phone. This is somebody who understands how complex the supply chain and the BOM is for BOM bill of materials for building a product like a smartphone when you're competing with the likes of Google and Apple and I guess Microsoft. They don't really have a product anymore, but certainly Samsung, Huawei, Xiaomi, and others in China that are crushing it and selling billions of these devices every year. You'd ask yourself, why would a crypto foundation want to sell a phone? Well, if you fundamentally believe that the future is decentralized and you want to promote decentralized communications networks, decentralized transaction processing, decentralized identity management, and get out from under the thumb of big tech, if that matters to you, especially with the onslaught of AI, then I think this phone is a big deal, right? It's not for everyone. It's very early. It probably needs another couple of generations to become truly huge mass market. And they may skip the phone and go to something like glasses as well, but that's just a form factor at the end of the day. It does enable new applications, especially via the holographic stuff we talked about before, but it's a big deal for the Web3 audience, okay? All right. Last bit of tech news before we move on to crypto, Boston Dynamics. Now, Boston Dynamics is the company whose videos you've been watching for 10 years. They have all of these super cool robotics videos. Their most famous robot slash droid is this Spot, which is this yellow dog-looking robot that basically can patrol neighborhoods. It's being purchased by police departments. It's being purchased by warehouses and other places to do security. And it's now able to apparently autonomously unlock doors. So that's pretty cool. It will have embedded digital access credentials. So speaking of Web3 decentralized identity, those access credentials can work over Bluetooth, which means you don't need the internet to just present the credentials, right? So this would allow the Spot robot to pass through automated doors during security patrol sessions. Super cool idea. Anyway, I think Boston Dynamics is a very important company that has played a critical, pivotal role in the development of robotics. Even if other companies end up winning the race, whether it's Tesla or Figure or Chinese counterparts. And, I talked about the productivity gains that could become essential to solving our debt problem last week in Money Talks. And this company, Boston Dynamics, has really helped propel this space forward. And we owe them a debt of gratitude for their efforts, because it was not a huge money making effort for I guess decades. And so if they do become a big, wildly profitable business, they deserve it for sure. Okay, let's talk about crypto for a few minutes and investing. BlackRock has been in the news talking. By the way, the CEO of BlackRock has been all over the press. I mean, this guy talks about Bitcoin just as much as I do. It is crazy how far we've come, right? So you're talking about execs that probably considered talking about crypto and Bitcoin as truly toxic a few years ago, are now going on CNBC and other, Bloomberg and other business programs pretty much every day, talking about why Bitcoin is a hedge against future inflation, digital gold, and I forget his name, Robbie Mitchnick, who kind of runs digital assets for Bitcoin. Very nice guy. Was on one of the talking head shows, maybe it was CNBC, I don't remember, but he basically said that there's been periods where Bitcoin correlation with equities has spiked, and there's been periods where it's gone negative, and it looks a lot like gold, which has some of the similar patterns where you have these temporary periods where it spikes, but long term, the correlation is close to zero, and that's what you want in a hedge, right? And so from a kind of a macro foundational perspective, it really is this perfect hedge versus traditional markets, because it's mostly uncorrelated over time. Now, when liquidity is flooding the markets, which we'll come to in a moment, everything should be going up with, including bonds right now, because interest rates should be falling in this environment, right? So he also mentioned that in one of the interviews I saw that its unique attributes as a global, decentralized, non-sovereign asset make Bitcoin not tied to any single country's economic health or policies, and as a scarce asset immune to all of these kind of risks of currency debasement and political turmoil. It becomes a very attractive option when traditional currencies falter, and historically all fiat currencies falter. So again, as I always tell you, I'm not here to give you investment advice. I'm here to give you information. I might give you my opinion on things, but clearly the folks at BlackRock get it. and it looks like they're making a multi-billion-dollar bet on Bitcoin and crypto in general. All right. So let's see. By the way, the iShares Bitcoin Trust at BlackRock is now at over 20 billion in assets, and with this week's price gains, it's probably closer to 25 billion in dollars. And this is huge, folks. Remember, this is an ETF class that didn't exist this time last year. We were speculating about it. We were hypothesizing that it was coming, but there were no Bitcoin ETFs, and they're just one of several. So this one ETF is now holding probably, at least as of the time of the recording, about 25 billion in assets, and the number may even be higher. And others like Bitwise have also been crushing it with their ETF. Now, I am not personally a fan of high net worth investors or upper middle class investors using Bitcoin ETFs as a means to get price exposure to Bitcoin. You should be owning and holding Bitcoin full stop. Okay, you can go to Abra.com if you want to find out, in my opinion, the best way to do that. But you should be holding your own crypto, right? Whether it's Bitcoin or Ethereum or Solana. I think the ETFs have been fantastic for the space, but they are not the best way for the average high net worth investor, family office, upper middle class investor, again, in my opinion. Now, by the way, if you have a 401k or an IRA and you want to add price exposure and they don't offer native Bitcoin, the ETFs can be a fantastic solution, right? But that's kind of the difference for me between the majority of money in crypto and an important subset, right? Especially if you have matching funds from your employer, right? The 401k is a great way to get in exposure to the space and also potentially get your employer to help you out with more participation. Okay, enough on the ETFs. Altcoins surged this week. So the market cap as of last week for altcoins was up significantly versus Bitcoin, and I believe that that's going to be the case at the end of the trading close on Sunday for this week as well. If I look at the total market cap for Bitcoin on a weekly basis, it is up 4.5% as of Friday morning this week. And if I look at Bitcoin, it is up about 3.5% for the week. So what that tells me is since the market cap for crypto includes Ethereum and Solana and basically all of the altcoins, that altcoins are outpacing Bitcoin for the week. And for example, for today, the market cap of crypto is up about 1.4% and Bitcoin's up about 1%. Solana has also caught up to Bitcoin for the year. Now, over the past year, Solana has crushed it versus Bitcoin, right? I mean, Solana troughed at about $20 and is now trading at about 160, so about an 8x return over the last 12 months. About 12 months. However, since January 1, Solana and Bitcoin are at exactly price parity, which means on a percentage basis, there's no gains in terms of Bitcoin versus Solana this year. Now, I actually believe that's incredibly bullish for Solana. Why do I believe that? Most altcoins have fallen significantly versus Bitcoin this year, right? So Bitcoin got a huge bump, right, when coming out of the ETF announcements. Altcoins got a huge bump, but altcoins pulled back huge, giving back like 70-80% of the gains. Solana did not do that. It did peak at like 200-ish, and it's come back like 20%, but that was after an 8x run, right? So that's very reasonable after an 8x run, and it's more or less been sideways, and Bitcoin has more or less been a little bit better than sideways since the ETF announcements, right? So in my opinion, this is super bullish for Solana on a relative strength basis. And I do expect, my opinion, again, not investment advice, is that I expect Solana to outperform Bitcoin significantly for the next maybe year to 18 months. Again, I don't really, other than the overlap it being crypto, I don't really look at Solana and Bitcoin the same way from a technology perspective. They're solving completely different problems. Bitcoin is being used as digital gold, and maybe if Lightning catches on, the ability to do very simple payments in places where the banking systems have failed. But obviously, digital gold for everyone. Look at the MicroStrategy playbook. But if you look at Solana and Ethereum and Aptos and Sui are all competing to basically be the world's computer of the future, right? To process transactions. And I think the killer app is going to emerge as AI smart agents. There's going to be millions of these smart agents that are going to use crypto to process transactions, because there really is no other way. How can you have an autonomous agent if you're dependent upon a stored value banking system to process transactions? You're not autonomous anymore because the bank can shut you off anytime. But if you're using a decentralized crypto model with a local wallet, then nobody can shut you off. That's the beauty, I think, of this smart contract model long term, again, which is very different from Bitcoin. I don't see Bitcoin transactions being used to power smart contracts anytime soon. It's not optimized for that. Right now, it's optimized as digital gold, has the promise via Lightning and other things to become transactional in the future, and I hope it does. I've been saying that for as long as you've been watching Money Talks and longer, but it hasn't happened yet. Okay. So interesting week for altcoins. I look. The other thing I would say is this kind of sideways summer over? I don't think so. I need proof, right? And so two things have happened that I think are really important here. One, the U.S. has begun lowering interest rates, and clearly the economy is slowing, right? We had revisions downward on the number of jobs added over the past year. It turns out they were all government jobs anyway. Clearly, we're heading towards, we're not in a deflationary environment yet, but if things keep trending the way they are, we will be in a deflationary environment soon. Inflation is, now, the impact of inflation over the past 5 years has not been mitigated, right? The prices are still high as a result of the inflation of the past 5 years, and those prices have not come down. They're still going up. They're just going up at a much slower rate, right? Back down closer to 1 to 3%, depending upon what components of GDP and the economy you're talking about. Okay, but that plus the fact that China is now lowering rates, introducing stimulus into the economy is a very big deal, right? So they've launched stimulus. PBOC, the People's Bank of China, has cut rates, and they have very clearly said that they will do whatever it takes to get back to sustained growth. But China is in trouble right now. And the latest cut, basically is showing weakness in the banking system. They're trying to get the repo rates down to stabilize the banking system, which is a long-winded way of saying there's not enough liquidity in the banking system, and they're going to do whatever it takes to stabilize that banking system. Now, you hear a lot about China as being kind of our foe or enemy or biggest competitor. When it comes to money, make no mistakes, folks, our global economy is completely interconnected, right? The Chinese banking system, the U.S. banking system, the Japanese, the European system, right? The Japanese and the Chinese are the largest non-Federal Reserve holders of U.S. treasuries. We need to make sure that they're incentivized right now not to dump those treasuries on the market. Because if they do, the price of treasuries will plummet and interest rates will spike, which will have the reverse effect that they're trying to have. Now, they know that, right? So they know that they're kind of stuck right now where they can't just dump treasuries, right? They need their economy to be stronger in order to do that. And right now, it would create big structural problems because, again, you want to sell into strength, not into weakness. Anyway, so my point is that I think these actions are correlated. I think Yellen and her counterpart are in regular dialogue. I think the PBOC and Powell's teams are in regular dialogue. I think the same holds true for Japan. for the European Central Bank. I think these activities are coordinated. I don't think that they're just making decisions in a vacuum. I think each group is doing what's best for their own country, but I also think, or in the case of Europe, their own group of countries, but I also think they know that these economies and supply chains are intertwined, and our fates are somewhat connected, and it behooves the U.S. and Europe to do whatever we can to make sure that we're in a position to go it alone should things go really south in China. And the current leadership is very disappointing in China, right? I mean, this was an economy that was the envy of the world up until 3-4 years ago. It was a startup haven. You could build anything there. And I see basically zero venture investment happening in China right now as a result of these newfound protectionist policies. It's effectively the opposite of what's happened in Argentina. Since Milei came to power, and by the way, you should watch Milei's speech at the UN this week. You should watch Biden's speech and then watch Milei's speech, or whichever order you want. You'll get the point immediately. It doesn't matter, right? It is astounding, the turnaround in Argentina. When you eliminate protectionist policies that don't add value, when you focus on free market enterprise within reason, amazing things will happen. And that's what's happening in Argentina. The last thing last point I'll leave you with here is I have been paying attention to the banking system and the treasuries on the banking system's balance sheet for several years now. We've talked about this before in Money Talks. But the unrealized losses on investment securities for U.S. banks have now reached over $500 billion as of the end of the second quarter. Now, to put this in perspective, this is 7 times higher than at the peak of the 2008 financial crisis, right? It also marked the 11th consecutive quarter of unrealized losses as interest rates continued to pressure the U.S. economy. So I think that the Fed's perspective on this, I have no insight, I'm not there, of course, but I think that their perspective on this is they were happy to keep rates where they were so that they didn't become a pariah in terms of causing further inflationary pressures. But now they have no choice but to do whatever they can to force interest rates down in this country, not just the interbank lending rate, but the rates at which they can issue new debt. Because if they don't refinance existing maturities at a lower rate, right, it is going to be a disaster for this country. Because the debt burden for a lot of the short-term 10-year bonds and other instruments was basically set during near zero interest rate environments. The challenge with that is in order to get the rates down, they force the banks to buy the treasuries. In many cases, I think they're going to be buying treasuries they don't want, especially when they're sitting on unrealized losses on these treasuries. Now, I think that this $500 billion does not include commercial real estate. Okay. Now, I would guess that if they aggregated the commercial real estate value, loan book, plus the investment securities that would be, effectively treasuries and other bonds, that the losses or unrealized losses could go into the trillions. I don't know. Now, the banks are praying that if interest rates come down enough, that will drive the value of these commercial real estate properties higher so that they're not carrying unrealized losses on their books anymore, right? Remains to be seen. I know that San Francisco is coming back, but I would venture a guess that it's not even anywhere near the prices that it was at when a lot of these real estate loan deals were initiated, okay? That's a big problem, and it's unclear how it's going to play itself out, but something's got to give. Speaking of debt, I think Trump mentioned during one of his campaign speeches this past week that holding Bitcoin could be a potential contributing solution to the government paying off the trillions of dollars of debt that it holds. That makes sense. If the dollar is a depreciating asset and you could hold an asset that has proven over the last few years to be an exponentially appreciating asset. Obviously, it can't appreciate exponentially forever, but if the dollar starts to hyperinflate itself to zero, then effectively a deflationary asset is an exponentially appreciating asset forever, and so it behooves anyone and everyone, in my humble opinion, again, not investment advice. I'm not giving people investment advice. I'm not giving government investment advice. But my opinion is that if you have the ability to effectively put your assets into an appreciating asset where your measurement of your store of value is in a depreciating asset, which is the dollar, you would be crazy not to do it, right? The single best performing stock over the last several years is not NVIDIA. It is MicroStrategy. Okay. Now, obviously, everybody is aware of the miracle story of NVIDIA, but you have to look in awe at the stock performance of MicroStrategy over the last 4 or 5 years. It is absolutely remarkable. And if you look at the current weekly close price for this week, it is closer to a new all-time high than Bitcoin is, right? MicroStrategy was effectively a failed stock back in at the beginning of 2020. MicroStrategy was trading for about $16. It is up over 10x, right, in the 4.5 plus years since they've effectively adopted a Bitcoin strategy. And right now, MicroStrategy is basically a levered bet on Bitcoin, because what the company is cleverly doing is they are borrowing against their existing shareholdings, right? Their existing stock, by issuing basically convertible notes. It's basically like levering yourself, but you're basically doing it by diluting existing shareholders. But they're telling shareholders, this is a great deal because we value the company in dollars, but we're using those extra dollars to buy an exponentially appreciating asset, which is Bitcoin. So of course you'll take the dilution all day long, right? So that's the MicroStrategy quote unquote playbook. Now they can do that, right? At this point, they've achieved a certain escape velocity on this strategy, which is allowing them to borrow at near zero rates. But even if you're just holding Bitcoin and you want to borrow, let's say 10% of the value of that Bitcoin to buy more Bitcoin, right? Historically, that's a fantastic bet. Now, technically that is leverage, right? Just like doing a HELOC against your house is actually leverage, right? Because you got to pay back the cash at some point. But if you actually are very, very careful with how you structure the loans and you keep the loan to value ratio low, like I said, 10, 15, 20%, historically, that's a very smart bet, right? And again, it's just my opinion. I'm not telling people what to do. I'm not saying people should go and take loans they can't afford to pay back. That's silly. I'm not recommending that. I'm just basically saying that at the end of the day, if you can borrow against the value of Bitcoin and in theory, just ride the price appreciation of the Bitcoin, in theory, you can just keep borrowing forever, especially if the dollar keeps falling at the same rate or if its value keeps decreasing at an increasing rate, which is, where the government seems to want this to go. It seems like they want a coordinated effort globally for the value of fiat money to fall at a rate that basically makes the debt burden manageable, because they believe that we're not going to get our house in order, right, to start paying down the debt, which is what we should be doing. Okay. So again, I think the future of banking is basically Bitcoin as collateral, kind of a base layer collateral, and people borrowing in dollars, euros, yen, and the like, right? And we're seeing examples of that with the MicroStrategy playbook, other companies, high net worth people. I've heard anecdotes of family offices doing that now, and it's a super interesting model. Okay, so Like I said, we're not here to give you investment advice, certainly not here to tell you what to do. Lots of interesting things happening on the crypto and technology front right now. We've got just awesome stuff going on all around. I hope the stuff in the Middle East comes to an end very, very soon. I'm kind of sick of the election cycle again. It's basically a tied race, right? Obviously, Harris is most likely ahead and maybe will win the popular vote. But in terms of the actual electoral college, it's a dead heat. Even Polymarket, right? I mean, if you take 50 basis points away from one candidate and give it to the other on any given day, it's completely tied. It's crazy, but that's where we're at after all this. And at this point, they've got to go out and spend billions of dollars of money they've raised from all of us to basically do advertisements in 7-8 states that most of you have never been to basically figure out how to convince the 0.5% of the people who haven't made up their mind yet to make up their mind, as if they didn't know what the issues were or where everyone stands at this point. It's crazy how this all works. Anyway, I'm going to leave it there, but super interesting stuff going on. Lot more things I want to talk to you about in the coming weeks. We're going to have our new chairman, Shervin Pishvar, on in the next couple of weeks to talk about some of our work and what we saw at the Network State event, which was really interesting. I think the videos are online now. You can go search Network State Conference on YouTube, and you can watch the videos. They're really, really excellent. Very high quality, high signal to noise ratio, as one of my colleagues put it. Okay? All right, gang. So we're going to leave it there. Fantastic episode. Thanks to Jacob and the Abra team for all the help. And we will see you next week on Money Talks. Take care, everyone.